Hi you guys, welcome back to Progressive Sisters Magic, and we've made it to lesson 6. Okay you guys, lesson 6. Give yourselves a round of applause for getting this far. If you can make it this far through all the boring stuff, then you're really gonna like it in the direction where I'm going now. Okay, so now we're about to learn about technical analysis, how to read charts, how to actually understand the chart so that you can actually make money in the market. Okay, and these charts are not just specific to crypto. Understanding charts in the way it moves and the way it flows and everything is imperative for any financial market that you want to trade. So that means that the information that I'll be teaching you today, you'll be able to apply it to any financial market. Okay, you'll be able to experiment in different markets and trying different trading strategies as long as you know how to read the charts. The charts for any financial market all moves the same. There's ups, there's down, there's higher highs, higher lows, lower highs, lower lows, all of that good stuff. Okay you guys, I'm going to teach you about that all today, and we're going to have 2 parts to this lesson. The first part, we're going to be going over the basics, okay, and then the second part, we're going to be going over the core principles. So if you know what candlesticks are and liquidity and volume and things like that, you may want to go ahead and go to the next video to where I can give you a more in-depth, deeper dive inside of the core principles for these trading analysis. But if you don't know what any of that stuff is that I just mentioned, or you just want to get a better understanding of it in general, let's go ahead and hop into it right now. So let's get into the first thing, which is going to be, what is technical analysis? Technical analysis, or TA for short, is a study of price charts to predict future movements in crypto markets. Instead of focusing on a coin's fundamentals, like the project team or tokenomics, TA focuses on patterns, price action, and market psychology reflected in the charts. Think of TA like weather forecasting. Just as meteorologists study past weather data to predict tomorrow's rain or sunshine, traders study past price patterns to forecast where crypto prices may move next. So you guys, you have to know the charts. You have to be able to have technical analysis as a skill when it comes to trading. Now, you have to be able to tell which direction the chart is moving in, what direction the price is moving in, so that you can enter into a trade and close out of that trade and be able to make money and not lose money. Now, I will tell you, prices fluctuate. Crypto is very volatile, which is why they call it the most risky asset that you can have. But it can be very rewarding if you know how to read the charts and you can predict where the price is going to go. Now, no one in this world can actually 100% predict every single price move that the crypto chart is going to do. But if you understand patterns and if you understand candlesticks, which we're going to get into in a little bit, you'll be able to have a pretty good understanding to where you'll be able to make pretty good profits. And just like humans have psychology, these price charts, this technical analysis also has market psychology. The market, you have to understand, is a makeup of the actions and the influence of people and products, okay, and finance, okay? So all these collectives of these different things and these different energies and these different emotions and all different decisions and everything are coming all together inside of this economical market data, okay? That's what you have to understand. I think a lot of people don't really think about that. They're like, oh, the price is moving, you know, because this and that, da da da. The price is moving because people are making the price move, okay? When people panic and they sell stocks, okay, and then the price of the stock goes down, the price of the stock didn't just go down, people did that, okay? Institutions did that as a collective. So the market does have a collective psychology, but the majority is going to rule and the majority is going to move the market. And we'll go into that a little bit more. So you may be thinking, I want to practice technical analysis. I want to learn how to read charts and things like that, but I don't want to open up a trading account yet. I'm not comfortable with opening up a trading account yet. Even though you can open up a paper account, which is going to be a demo account, which we'll talk about a little bit later, okay, you guys? But if you don't want to open up an account at all, you just want to read charts, you have what they call Trading View. Now, day traders, swing traders, investors, they all look at Trading View. Trading View is the #1 platform for technical analysis, okay? Even after you open up an account with your brokerage, you're 9 times out of 10 still going to use Trading View to analyze the charts. What is Trading View? It's a website and app that provides interactive charts for crypto, stocks, forex, and more. Most crypto traders use TradingView to analyze Bitcoin, Ethereum, and altcoins because it offers free and paid versions with real-time charts, drawing tools, trend lines, support and resistance, Fibonacci, etc., technical indicators, RSI, MACD, moving averages, etc., the ability to save charts and create watch lists. Just like stock traders use platforms like Bloomberg or Thinkorswim for market charts, crypto traders rely on TradingView. How to get started? Go to tradingview.com, create a free account, and open a chart of Bitcoin/USDT. So I do want you guys to understand that no matter what financial market that you choose, you can do TradingView for it, okay? TradingView offers futures, forex, stocks, commodities, crypto. It offers every financial market, okay? You just type it into the little search bar, type in the symbol that you're looking for, and it will pop up a chart for you. Now, with this chart, you're able to draw lines, you're able to draw circles, you're able to single things out, you're able to zoom in and actually really look and study the charts, okay, you guys? You're able to write notes on it. You're able to set reminders. You're able to set alarms. You're able to set anything that you want on this TradingView. Think of it. You know what I just thought about, you guys? So I do a lot of study about crypto, and they have what they call decentralized apps. So you can think about TradingView almost in the sense of a decentralized app, only because they're giving you the platform of TradingView and you're able to do anything you want with that platform. You can make your own portfolio, okay? You can label it, you can write notes, you can do anything. You can actually share it with other people. You can save it to a file. You can reconfigure it. You can even, like my charts on my TradingView are literally pink and purple. Pink and purple, because I just wanted to customize it all just to like match me, okay? So you can do all that you want with TradingView. It's amazing, okay? They also have another platform, a newer platform called Webull. Now, a lot of people do use that, but the majority use TradingView because TradingView offers everything. Even the small little meme coins, like Pepe. It's going to be on TradingView, okay? So it's really, really imperative that you understand how to use TradingView and how to use it to your advantage, okay? When you have apps like this and websites like this, you need to really use it to your advantage, especially when it's free. They do have a paid version, but all you need to know is on the free version. The paid version is just the fancy version, okay? So you can really get this for free, and it's amazing that it's free. That's all I'm saying. So again, you're going to be customizing your TradingView, but when you initially open up a TradingView website or a TradingView account, it's going to have what they call candlesticks, and those candlesticks are going to represent price movement. And that price action or that candlestick is going to be connected to a time frame, okay? So you have a 1 hour time frame, a 1 minute time frame, a 15-minute time frame, a 30-minute, a 4 hour, okay, a 1 day, a 1 week. You have so many different options of what type of time frames you want to see your charts on, and you can go back and forth between them. You don't have to open up a whole new chart, make a whole new account or anything like that. You can go back and forth between the time frames. Now, that one candlestick is going to represent the price action for that one time frame. So if you have a 1 minute chart, all those candlesticks on that chart are going to equate to or represent 1 minute. Price action for 1 minute. If you have a 5 minute chart, every candlestick is going to represent 5 minutes. Even if you have a 1 day chart that you're looking at, time frame, every candlestick is going to equal 1 day. Now, scalpers, which are people who get in and out of trades pretty quickly, they tend to look at like the 1 minute to the 30-minute time frames, or the 1 minute to the 1 hour time frames. But if you're day trading, you can really look at the price charts from 1 week to 1 day, 1 minute, 10-minute, 30-minute. You can literally look at whatever floats your boat, whatever makes sense, okay? Me as a day trader, when I'm trading just for the day, I'm going to look at the 1 week, the 1 day, the 4 hour, the 1 hour, the 30-minute, the 15-minute. That is me personally. Now, it does fluctuate by the day and what's going on inside of the market. But if I'm not seeing a lot of price action inside of the market, or I'm not seeing a good setup, I usually go further out into the history of it, like 1 week or 1 day, to see how the price was moving then, so it can give me some sort of direction of where it's going to go. go. Now, when it's behaving very volatile and the price is just moving everywhere, you guys, I'm going to be more so looking at the smaller time frames, trying to pinpoint where I can make an entry and where it makes sense and where I can go with the trend, okay? But that is a little bit more advanced, so we're going to scale back just a little bit and we're going to actually go over the definition of a candlestick. Candlesticks are the most common way to view crypto charts. Each candlestick represents price action within a specific time frame. For example, 1 minute, 1 hour, on 1 day. Green candles, bullish candles, price close higher than an open. Red candles are bearish candles, price close lower than an open. The body of the candle is the difference between the open and the closed price. The wick or shadow of the candle is the highest and lowest price reached in that time frame. Types of candles. Green is bullish. The close is greater than the open. Buyers were in control. Red, bearish candle. Close is lower than the open. Sellers were in control. So every part of the candle is important. From the body to the length of the candle to the length of the wicks to the color of the candle. Everything is equally important in order to study price action and have a clear representation of where price is moving. Like I said, you can customize your charts on TradingView to be the colors of what you want, but originally or just like universally, green candles on a chart is going to be bullish, okay? And red candles are going to represent bearish. So when you hear they have a bullish market, that means that there are more buyers in the market. The market is moving upwards, okay? Price is going up. But when it's bearish, that means there's a lot more selling. There's a lot more selling pressure. People are getting rid of that crypto. The price is going down, okay? Now, you as a trader can make money either way. Whether it goes up, whether it goes down, you can eat, okay? So the body of the candle is also very important. So for a bearish candle, which means that the market is going down in price, that means the candle is going to open up at the top and it's going to close at the bottom. So the top of the candle is where it opened, the bottom of the candle is where it closed. Now it's the complete opposite for a bullish candle. At the bottom is where it's going to open and at the top is where it's going to close. So you see it opened way low down here and it closed way up here. That means the price shot up, so that means it's a what? It's a bullish candle. Now the total opposite for bearish. Bearish is when the price is right here and it dropped all the way down here and closed right here. That means it's a bearish candle. Now the wicks are also very, very important. As I said before, everything is equally important when it comes to this candlestick anatomy, okay? And they also have what they call the Candlestick Bible. I think you guys should really check that out. All you gotta do is type it into Google and you can get the Candlestick Bible. It teaches you everything about a candlestick. You probably never knew that you need to know all this information, but you actually need to know all this information. It's very helpful. A little bit boring. They're not going to be teaching you how I teach you because it's just like reading, but it is very helpful. Now, let's go back to talking about the wicks. So the wicks are going to be the little lines that are on the candle. It's going to be the wicks at the top and at the bottom, okay? So the wicks represent where the price was trying to go, where the price got pushed to but didn't actually close there. So if you have a long wick at the bottom, that's showing you that the price actually was trying to go low, okay? But it closed higher, okay? If you have a really long wick at the top, that means the price was trying to go high, but it actually closed lower. So basically, when you have a high wick, that represents that there was failure in the market to keep that price going up, to keep it up high. That means that the bears were stepping in, okay? Now, when you have it closer to the bottom, a longer wick at the bottom, that means the price was trying to drop down there, but the market was like, no, we're not gonna drop it down there. We're gonna raise the price up even more. That means that the bulls are in control of the market. Remember, bears and bulls. Bearish and bullish. Why they call it that, I don't really know, but It's very much so a trend. It's very much so important to understanding the technical analysis of the charts. So those are two terms that you have to become very familiar with. Also, the length of the wicks are very important. When you have a very long wick, whether it be to the upside or the downside, that means there's a lot of volatility in the market. There's a lot of like, which way is the price about to go, okay? Now, when you have shorter wicks, that means there's more stability in the market. There's not things that are pushing it up all the way here. There's not things that are pushing it all the way down here. Sometimes the wicks are like literally so small you can barely see it. That just means that there's a lot of consistency and not a lot of volatility or like arguments inside of the market. Now let's get into how you can predict the price just based on the wicks themselves. So when you have a longer wick to the top, when the top is like very long, okay, and then a little wick at the bottom, that means it's probably about to be a reversal. That means the price is probably about to drop, okay? Now, complete opposite when you have the wick lower, okay? When it's going pretty down low at the bottom, that means also, again, there's going to be a reversal, but that means that the price is going to probably go up. Now, it's not always a guaranteed. You have to study the charts and you have to make sure that you're studying more than one candlestick. You can't see one candlestick with a really long wick up and then be like, oh yeah, the price is about to drop. No, it has to be consistent and consecutive, okay? The more candles that you have that are saying the same thing, the more you have a confirmation, okay? When you come into the trading world, you can't just base your trades off of like one or two candlesticks. You have to have a confirmation. So you have to see the trend and then you have to have a second confirmation saying, okay, this is a good trend. Now let me go ahead and enter into the market. Now let's get into an example of what I'm talking about. Example, if Bitcoin opened at 25,000, went up to 25,800, dropped to 24,900, and closed to 25,500. Candle body equals 25,000, which goes to 25,500. It's green since the close is more greater than the open. The upper wick equals 25,500, which went to 25,800. The lower wick equals 25,000, which went to 24,900. Imagine the stock market opens that Apple stock opened the day at 150, traded as high as 160 and as low as 145, and closed at 155. That's exactly how Candlestick tells the story of a coin's price during as low as 145 and closed at 155. That's exactly how Candlestick tells the story of a coin's price during a set period. So when you're looking at these candlesticks, you are literally like reading a book. It's telling you a story, it's telling you a narrative. You really just have to understand it and you have to listen, okay? So you're not actually listening to the charts. When I say listening, I'm talking about listening with your eyeballs and with your brain, okay? You're going to actually have to sit there and look at it and see, what are they trying to tell you? What are these candlesticks trying to tell me? Because each candlestick, I promise you, is trying to tell you something. Now, you understanding what that something is that they're trying to tell you, that's up to you and how much time, effort, and dedication you put into actually reading these charts and understanding these charts, okay? The more effort that you put into it, the more that you will understand. So remember when I told you that on TradingView, you can zoom in and literally see any time frame that you want on these charts? Well, now we're going to go into exactly what I was talking about when I'm mentioning time frames. Time frames. Charts are flexible. You can zoom in or out depending on your trading style. Scalpers or short-term traders look at 1 minute, 5 minute, or 15-minute charts to make fast trades. Swing traders prefer 1 hour or 4 hour charts to catch medium-term price moves. Long-term investors look at daily or weekly charts to identify major market trends. If Bitcoin is in an uptrend on the daily chart, but a 5-minute chart shows red candles, the daily trend is still bullish. Small moves don't change the bigger picture. Comparison. Just like in real estate, a buyer flipping houses checks daily price changes while a long-term investor looks at yearly market trends. Similarly, in crypto, your time frame depends on whether you want fast profits or long-term growth. So me personally, I have taught myself to be able to trade in any type of environment. So if I see big price moves like in a very small time frame, I know how to trade it. If I see overall a larger scale trend forming on a longer time frame, I know how to trade it. If I see something that's happening during the week, just like a week long worth of price movement, I know how to trade it. But that doesn't work for everyone. Everyone has their own different type of trading style. Some people only are scalpers and they make millions millions off of the 1 minute or the 5 minute time frame. It's all about those price movements and understanding those price movements, okay? So if you're a scalper and the price in those one little candles goes from like 15,000 to 25,000 just in like 5 minutes, and then it drops back down because there was just a little bit of a spike because institutions were pushing the price up. If you were in that trade, you made bank. You made bank, okay? Now, if you were in that trade on the opposite side, thinking that the money was going to go up, that the price was going to go up, but it actually went down, you were on the losing end of that trade and you just lost a lot of money. That is the only thing I can say about scalping, is it's so risky, okay? Because it's so fast, it's so quick, and the price is moving and jumping so like everywhere. You have to really be on point on where the price is moving. Now, if you're looking for an overall trend, if you're doing a swing trade, so that means a trade that you keep for like an hour or like a whole day or something like that, or maybe even over a day, you cannot base your decision on when you're going to enter the charts, or I'm sorry, when you're going to enter into a trade strictly based on only one time frame. These time frames all tell a different story. So like I mentioned, the 5 minute time frame is not going to be the same as the 4 hour time frame. They're going to be completely different. One may be bearish, one may be bullish, okay? They're going to be completely different. You have to look at the charts and the time frames as a whole, okay? Because price is moving very quickly. So of course, on the 5 minute, you may see like a little bit of price action to where it's saying, oh, it's bearish because there's a whole bunch of red candles in a row. Well, that was just for like 15 minutes out of that whole day, okay? But the rest of the day is like showing very much signs of it being bullish. But where you enter a trade is all going to be dependent on what type of money you're trying to make. Are you trying to make quick, fast profits, or are you trying to spread those profits over a long period of time and gaining more price action in between? So that's all up to you. So that means, do you want to be a scalper? Do you want to be a swinger? Or just want to be a long-term investor? Okay, that's completely up to you and whatever trading style you have in mind. But you have to remember that there are charts that you really need to look at per trading style. For scalping, the 1 minute to the 1 hour. For swinging, the 1 hour to 4 hour to the 1 day. Long-term investments, you got the 1 week, 1 month. You can even look at charts for 1 year. Okay, you guys, you can really customize your charts and look at the price action for whatever time frame you want. So, because you are able to do that and it's free, there is no reason why you should just be trading cluelessly. You need to have a clue. You need to have a clue. You need to have a clue. Now that we've gone over candlesticks and time frames, let's jump into volume. Volume is one of the most important aspects of technical analysis because price without volume is like a car without fuel. It won't go far. Volume measures how much of a coin was traded in a given time. How volume is displayed. On TradingView, volume appears as bars at the bottom of the chart. Green bar equals more buying than selling. Red bar equals more selling than buying. Each bar matches the candle above it. Like a green candle with a tall green volume bar means very strong buying activity. High volume, more buyers and sellers are active. Stronger and more reliable price movement. Low volume, fewer participants, weaker moves, more chance of fake breakouts. Example, Ethereum rises from 1800 to 2000. If the volume bar is small, possible fake breakout, low participation. If the volume bar is huge, real buying interest. The move is more likely to continue. So being that volume is super important, you guys, you have to understand it. So if what I said doesn't make any sense, I have a solution for you, because volume was something that was a little bit like hard for me to understand because I didn't really see the relevance in it on the charts. So I knew that it was important, but I couldn't really point it out on the charts, okay? Because there's so much going on. I have so many markings and things like that. So I use what they call Yahoo Finance, which is also a free website, you guys. Yahoo Finance is amazing because it will tell you the volume in real timing, okay? So the volume at that time, it's going to tell you. But the cool thing about that is that you can click on the historical data and it will show you the volume of every single day that the market was trading. It has the opening, It has the closing, the highest highs, and the lowest lows, okay, you guys? So I think that that is amazing that Yahoo Finance offers that, because what I do is I look at the charts, I understand what's going on in the charts, and then I go to Yahoo Finance, and then I have like a second understanding of what the charts are telling me. So Yahoo Finance is essentially telling me what the charts are telling me, but in a more simplified and easier and quicker version for me to just go ahead and make a clear decision on what I want. So I look at the charts, that's step one, and then I confirm it on Yahoo Finance, okay? Now, Yahoo Finance is a free platform, and I know we don't have it listed here on the training or on this lesson, but you guys, Yahoo Finance is gonna be your best friend, okay? Because Yahoo Finance not only shows you the historical data for every single day that crypto coin or whatever you wanna trade it, okay? Because they have crypto, stocks, futures, everything. It also gives you news. It also gives you their own take on the analysis of the charts and of the things that are happening, the price movements and everything. I'm not saying that you need to go strictly based off of what Yahoo Finance is saying. Oh, Yahoo Finance said that they predict the charts are going to go up, the price is going to go up. No, don't do that. Make your own technical analysis. That's why you have to understand these charts. That's why I'm teaching you this, so that you can make your own technical analysis. Don't use Yahoo Finance as a crutch. Don't use it as a crutch, use it as a tool. So the more volume, the more interest in the market, the more volatility, the more the price is going to move. The lower the volume, the lower the interest is in the market, the lower the price movements, and really the lower your money is going to be. When a lot of people aren't trading or not moving in the market, the price is not moving a lot, you're not going to make that much money, because you're literally making your money off of price movements, okay, off of those candlesticks. So if there's really no price movements and it's stagnant and there's not a lot of volume in the market, you're probably not going to have your best trading day. Now, on days when there are less volume in the market, there's not a lot of price movements, and you're like, oh my gosh, there's really nowhere for me to enter. What should I do? You do nothing. You don't trade that day, okay? That is my advice to you. As a professional day trader whose majority of her income comes from day trading, I'm telling you right now that you do not have to trade every single day, okay? No, you don't have to trade every single day. Some days you're not going to see a good setup. It's not going to be good. There's not going to be a lot of volume in the market. There's not going to be like a lot of price action in the market. So you just leave it alone. You step away from the charts. And that's when it comes to that psychology that we learned about the last lesson, okay? You have to learn when to just take a break, sit down and not trade. Have the discipline to be like, oh, I'm not missing out on anything. I'm going to sit this one out. Okay, or if you're someone who just has to trade every single day, you need to get knowledgeable in every single market. That's what I did. Now, I don't trade every day, but I am knowledgeable in every single market, so that worst case scenario, if anything happens in the crypto market or if anything happens in the stock market, I'm okay, because I know how to trade Forex. I know how to trade crypto. I know how to trade futures. I know how to trade stocks, okay? So I know how to trade each financial market that there is. So if I can't find a good setup in the crypto market, I'm going to move on to my stock options. If I don't see something good in the stock options, I'm going to move on to futures. If I don't see something good in futures, I might move on to Forex. Now, Forex is the least traded one that I do. That's the one I have the least experience in. But I'm just saying, it's good to be versatile in all of them, okay? Pick one, pick your little niche that you really, really like, that you really just love, okay? And that you trade on a consistent basis. But then know how to trade all the other markets, okay? Please. I'm telling you right now, learn all the markets, because if you still choose to trade when you don't see the volume working out in your favor, or it's not very enticing, or you don't see a good setup and things like that, you are doing yourself a disservice, okay? Because there is a such thing as fake volume in crypto, okay? And I'm going to go over that now. Signs of real volume. Volume increases gradually as price trends. Big volume bars align with real news events like ETF approvals, hacks, or exchange listings. The price follows through after volume spikes. Continuation. Rare to check real volume data. To confirm volume, don't just rely on one chart. Use trusted sources. TradingView shows live volume on the chart. Coin market cap / coin gecko. Compare exchange reported volume. Crypto quant / gas node. Show on-chain volume, exchange inflows / outflows. Binance / Coinbase order book. Watch live buy / sell orders to see real demand. So yes, you're going to need trusted data sources when you're trading crypto. It's not just about charts. It's not just about psychology. It's also about trusted sources, okay, you guys? Now, I just told you a lot of different sources that there are available out there. But when it comes to volume, you guys, I gotta say that Yahoo Finance is pretty reliable source. I mean, it's Yahoo Finance. It's pretty good and it's pretty straightforward. It's right there and it's in real live time, okay? It changes by the minute. So that is just my spill on it. But you also have all these other options that you can go with, that you can familiarize yourself with, just in case one day that Yahoo Finance isn't there, or just in case you actually don't like Yahoo Finance, because like I said, every trader is different. What I like, you might not like. You might actually really like looking at the charts on TradingView and looking at the trading volume that way, or actually comparing different sources and different data to establish a clear sense of where the volume is and where it's headed, okay? It's all up to you, okay? Now, I guarantee you, as a new trader, you're going to be looking on YouTube, Instagram, Facebook, social media in general, looking at these different traders and comparing their strategies to yours. Now, while I say that is okay to get an understanding or just an idea how other traders trade, you have to come up with your own trading strategy. What works for you? Do you trade ICT concepts? Do you trade demand to supply? Okay, do you trade volume? What do you trade, okay? What are the key aspects and the key indicators on where you're going to go based off of what the charts are showing you? Only you can figure out what works for you. There are thousands of different trading strategies out there, and you can take a little mixture of all of them and put them all together, or you can take none of them and make your own complete trading strategy, okay? Your own trading plan. It's all up to you. Be different, okay? One thing for one person may not work for another. You might not be a good scalper, but you might be a really good swing trader, okay? Try it all, see what works for you, and then come up with your own trading strategy. Now we're going to stop that lesson right here, and we're going to be moving on to part 2, which is going to be the core principles of the technical analysis. Now, I want you guys to always get what I say out of these lessons, but then go do your own research. After you get done watching this video, go on TradingView, open up an account. Look at everything that I just told you. Look at the volume, look at the time frames, look at the candlesticks, mark up your charts, do some trend lines, play with the indicators, just like really immerse yourself into the trading world, okay? These lessons are only going to work if you actually take the knowledge that I'm giving you, the information that I'm giving you, and apply it. So with all that said, let's hop into part 2.